Hello everybody, Derick Aubry with Living in Panama City Beach and Coldwell Banker Realty. Now, have you thought about getting pre-qualified for a mortgage and not sure exactly what that entails? Well, today I have Jay Posey, Vice President of Mortgage Lending at GRA, an affiliate here with Coldwell Banker Realty with over 2 decades of experience. This is the guy to talk to. Hey, thanks, Jay.
I appreciate it, Derick.
Now, there's a lot of misconceptions when it comes to financing a home. I've talked to current renters and renters out there. What's going on in the rental market, and I've dealt with first-time home buyers as well. And they have the same misconceptions about I don't qualify. I don't have 20% to put down, and they kind of shy away from even starting the process because they don't think they qualify. And that's why I wanted to talk to you to find out a little bit more about being a first-time home buyer, and also some of the people that that haven't bought in a while. Mortgage industry changes,
right?
And I just wanted to kind of touch on that. And
super. Well, Derick, again, thank you for allowing me the opportunity to talk to you about this. Mortgage financing. If you're not an experienced buyer, it can be scary. Okay, if you're currently renting. And it would be worth your time to talk to a seasoned mortgage professional about your ability to gain financing. The government has targeted low to moderate income areas of the country where they're offering special loan programs for first-time home buyers in these designated areas. They are called community reinvestment areas. What is a first-time home buyer in the eyes of most of these special government loan programs? Typically, a first-time home buyer is someone that has not owned a property in the most recent 3 years. So maybe you owned one in the past. For whatever reason, you decided not to own and you're ready to get back into the ownership. Typically, it is a 3-year period of not owning that allows you to requalify as a first-time home buyer.
Now, what about if, say you're currently going through a divorce, and, one person gets the home and the other person's needing to find a home on their own. Would they possibly qualify, or?
Very possibly. There are some extenuating circumstances to that 3-year rule, and divorce being one of them. So again, let's not decide we can't do it until we try. And there's also some very good loan programs out there if you're not a first-time home buyer. So, you don't have to be a first-time home buyer to get some good advantages.
Right. Now, as far as 20% down, I've been in the business for a while, so I know that's not the case. But, what are some programs out there if someone's trying to get in with at least about the money to put down?
So, in the typical loan areas, the VA loan, if you're a veteran, you know that you have earned your opportunity to own a home with 0 down and get a very good loan if you're a veteran. Unfortunately, not everybody's a veteran. In our market, we do have a lot of veterans. And veterans, if you have any desire to buy a home, talk to Derick, talk to me. We would love to get you on that road. But we're not a veteran. So what other options do you have? There are some very good loan options starting with just 3% down to get you into a very good mortgage at a very competitive rate. Those and that's a conventional loan. Okay, then FHA requires 3.5% down. So again, if you're looking at a $200,000 house, you need somewhere between $6,000 and $7,000 for down payment to be able to qualify for a very good home.
And with the market the way it is, we've been seeing a lot more sellers' contributions as well. How does sellers' contributions work when it comes to the mortgage side?
The housing market, as you know, is very competitive right now. But by making a fair offer when you're tendering an offer to buy a home that's on the market, as opposed to trying to beat them up on price, I and everybody needs money to close. They're called closing costs, and prepaids are added to your down payment. And if you make a fair price and you get the seller to agree, they can pay the majority of those closing costs. So you could get in for really just your down payment, maybe plus a few extra dollars, if they don't cover the whole thing. But you are looking at 3% of the purchase price is eligible for a low down payment seller concession to cover some other cost associated with buying a home.
Right. Now, as far as misconceptions about not being able to qualify, first how long does it take to get pre-qualified for a mortgage?
Well, it can take as little as 24 hours. It can be very quick. But everybody's situation is a little bit different. If you are a salaried employee and excellent credit and money in the bank, it is lightning fast. But we're not all that, right? Not everyone has that ability. So let's say you're a self-employed. It'll take a little bit longer time if you are a 1099 or self-employed person versus a W-2 person. It'll be, and the difference there would be for a W-2 person, we're going to collect recent pay stub and a W-2 to calculate your income usable for the mortgage qualification. Whereas if you're self-employed, we may have to use tax returns. And I often hear this, well, I'm self-employed, and you know the game. I don't like to show a lot of income on my tax returns. You know the game. I hear this all the time, right? They say, you know the game. I say, yes, I know the game. There are also some other loans that can allow us to use other forms to calculate your income. For example, a bank statement program. Someone that brings in funds, but they may not float all the way down to your bottom line taxable income. Okay. So there are some alternatives. Not everyone fits into the same box. So we have a bunch of boxes.
Now, as far as credit scores, because that's another thing that's brought up, they don't think their credit's good enough. What kind of credit score are we looking at to get qualified for a mortgage?
So again, the government-sponsored enterprises who create the underwriting guidelines for conventional FHA and VA mortgages have recently lowered the credit standard, okay? But in general sense, you need to be a 600 credit score and higher. Are there loan programs that will go down into the mid-fives for minimum credit score? There are. But those are special circumstances, and although they allow those lower scores, what caused your score to get down that low may be preventing you from qualifying as well. So again, none of these loan programs require perfect credit. So how do we know? We just have to review your application, review your credit report, and tell you, what if you're just below the minimum standard? We have ways of helping you get that score up.
Well, it sounds like there is a lot of options when it comes to first-time home buyers, or like I said, if you haven't bought a home in a while. I'm going to leave Jay's information down in the details below. So if you have any questions at all regarding mortgages, reach out to Jay, and he'll be happy to help you out. Jay, I really wanted to thank you. I really appreciate you taking the time to meet with us. And again, if you have any questions, Jay's information is going to be below. Just give him a call, email him. If you're planning on buying, selling, or investing, you can always reach out to me or Frank, living in Panama City Beach and Coldwell Banker. Until next time.